Hey everybody, welcome to Trading Futures with me, Anthony Crudele. Today on the show, I'll be speaking with the founder and CEO of Our Best LLC, Joe Wilkins. Head of Institutional Sales at DrawBridge Lending, Michael Creadon. The owner of Balance Flow Wellness, Nolan Lee. Trader and performance coach, Dan Hodgman. And last but not least, futures trader, Dani Sittloh. Welcome to Trading Futures. All right, everybody, we're kicking off today's show with Joe Wilkins, right at the charts. Joe, what are we looking at?
Anthony, the ultimate goal of building a trading model is to fit the data correctly. What we want to find is a nice balance between underfit data and overfit data. And what that means is if we're following a number of, let's say, winning and losing trades, we don't want to carve out a sample that is a mixed set. We're trying to find a nice balance between winning trades and losing trades. So our top chart here is a classification model, and our bottom chart is a linear regression model. If you can see the underfit value, there really is no significance in finding winning and losing trades. And on the opposite side, the overfitted model, you're really trying to, you're chasing the market in that way, and there's no real relevance in a winning percentage, let's say. Our appropriate model is in the middle here that carves out a nice selection of winning trades and losing trades so that then we know where to build the rest of the model.
So just so I'm clear, X is a losing trade, the 0 is a winning trade.
Correct.
Cool, thanks.
And how do we do that? We collect data. We collect massive amounts of data across all the different markets, 35 different markets. We collect up to thousands of trades. We build a simple model that captures values of relationships prior to the trade. Right the second before the trade is initiated, we capture a number of values, and what we do is we pull that from all kinds of different time frames across all different markets.
Gotcha.
Okay?
Interesting.
And so these are the relationships that we capture. So we test dozens and dozens of relationships in the market. As you know, there's so many different indicators you can use, so many, whatever your mind can think of as a potential indicator of future performance of the market, we try to brainstorm and use. We've tested literally hundreds of different relationships. And by relationships, I mean momentum indicators, volume indicators, range indicators, whether it's measuring the past week of trade, or the last month of trade, or today's range, or today's volume, or momentum, all kinds of different things. And what we do is we capture those values just prior to the trade. What invariably happens is that only 3 or 4, maybe 5, have some kind of statistical relevance, and the rest are kind of just break even.
I'm curious, how are you getting all of this information, and then what are you putting into what type of software to be able to see this?
Well, we collect our data from Tradestation,
okay.
and we, like I said, we capture these values. We write our algorithms to capture values. So there's an export routine that captures values of relationships just prior to our trade, and then we export that and import that into an Excel sheet and run our tests on this and to see what our formulas come up with as statistically relevant.
Nice, thanks.
One example of that is volume at price. Everybody's kind of familiar with market profile and how a market moves. And let's say if we're measuring the top 3 prices, I know some of the charts you've had on the program before are showing our recent uptrend in the S&P. And as the market is making new highs, if you can just imagine on a daily basis, those top 2 or 3 prices are accumulating volume relative to some of the lower prices. And what we have found is there is a predictive value in the volume at the top as a ratio of volume during the range. So if you have a distribution, it kind of gives you a nice picture of the distribution. And what we found is there's a nice linear relationship to that. Above a certain threshold, this red line is our 50% winning percentage. And this is the percent return per trade. And as you can see, there's a basic progression on each side of the chart that after a certain threshold, we have the probability of a winning trade in our favor.
So is this basically how you would weed out what's not working and do more of what's working?
That's correct.
Gotcha.
That's correct. More of what's in our favor.
What's in your favor?
Put the odds in our favor. So then what do? We take that and we build a trading model with it. We build a classifier. So we accumulate 3 or 4 different factors, relationships. It could be, relationships between this and that. And then we take those 3 or 4 combinations of factors and put it into one classifier. So how those work together, the correlations between those, gives us an even greater predictive value. And again, a nice linear relationship occurs where after a certain threshold, after a certain trade selection score, we have a better than 50% winning percentage. And so those are where we will wait until the market, if you can think of a cluster of trades, we're capturing a universe of trades, a lot of losers, a lot of winners. We're trying to navigate into a zone where there's mainly winners. There's still losers in there,
yeah.
as we know, but what we're trying to do is put the odds in our favor. So we're in a universe of friendly trades.
Great stuff. I mean, it's just emphasizing what we as discretionary traders talk about a lot is do less of what's not working for you and more focus on what is working for you. And obviously when you're building an algo like you are, this is just, it's great insight, Joe.
That's exactly right. And we stress, as you do on your show, discipline. And so when we are able to create a specific lane that we stay in, we're always swinging the bat the same. It's always the same, and it's always in our favor.
Gotcha.
So, once the algorithm's built and once our trades occur, we do a post-trade analysis, which is also pretty important and recommended for other traders as well. Analyze their trades and how they're doing and what the market does to increase their profits. So our trades, we go back after our trades are done, we measure what the market did and how long the trades lasted. And so, or what the market did after we got out, or what our optimum profit levels are. So what we have found is that in our particular model, about a 270-minute time frame captures where intraday traders. So after a 270-minute time frame, when you're in the trade, it's captured 90% of our profit. So at that point, we often stay longer because we feel the trend is strong that day or that moment. But oftentimes, that's pretty much the peak of our profit level.
Yeah, that's interesting because with any trade, you always want to be in it longer, especially if it's your way, right? The longer you can hold it, the better. But you have figured out a way to determine after 270 minutes, you said?
That's right.
At that point, 90% of it has already been taken. So do you adjust your stops accordingly?
Our stops move with the market.
They move with it
we
anyway.
move with it anyways, and that's part of our risk management. We're very conservative, and we're very, we don't want to overstay our welcome.
This is great stuff, but we're not done yet, Joe. You ready to look at some trades next?
You bet.
All right. Next up, everybody, now that we've seen how Joe develops an algo, let's take a look at some of his recent trades. Stay tuned.
This is my headquarters. This is where I trade and manage my portfolio. Since I added futures, I have access to the oil markets and gold markets. Okay, I'm plugged into equities, trade confirmed. And I have global access 24/7, meaning I can do what I need to do. Then I can focus on what I want to do. Visit your online broker today to learn more.
Welcome back, everybody. Joe's still with me. Joe, what model are we looking at here?
Anthony, we're looking at our intraday trend following model. It's a model that starts at 6 a.m. We measure the overnight range in the S&P. This is the S&P. Earlier in the month, we had a couple of large days down, and we were able to capture them in using this model. So you can see the overnight range here in the box. 6 o'clock starts the market here. We sell pullbacks. We measure how fast the market is going in one direction, along with the volume profile and the other factors that we mentioned earlier. And when the algorithm decides that this is a shot we want to take, it puts our limit order in. It puts a stop in simultaneously, and when our order gets filled, it puts in a target. Our general targets range from 2 to 4 to 1 risk reward, and in this case, the market came up, filled our order. went quite a bit against us, but we were saved. Our stop didn't get hit, and then the market started in the general trend that it had started overnight, and we were able to take a nice little winner on that. Now, what was rare that day was that occurred pretty quickly, as you can see, and we actually ended up selling it again later in the day, only to scratch it, or I believe it was a small loss at the close, because we liquidate at the end of every day.
Yeah, I had a couple of questions for you, and that was one of them. So at the end of every day, no matter what, out.
Correct.
Okay. And this boxed off area is where the algo is calculating, right?
It's keeping track of the overnight range and all the indicators and factors that go into the algorithm, correct.
Great, thank you.
Our next trade, which is the very next day, again, the overnight range, 6 o'clock starts. The market came up and threatened to make a new high, but didn't. What happened was we had, I forget exactly what the fundamental was that day, but it sent the market lower. And again, we sell a pullback, and then we put a stop in and put our target in and let the market decide what we're going to do. We know that it's a numbers game. Because we're algorithmic traders, we have the odds in our favor, and all it is a numbers game. The more trades we take, the more likely the odds play out in our favor. So we like markets that look like this and that we take a lot of trades in. Yeah. So again, sold the pullback, bought towards the low there, and it achieved our price target, and we were out by 1 o'clock.
Again, going back to an algo versus a discretionary trader like myself, and that's a tough short right there. Because after you just see him get buried,
right.
It's hard to sell that first, because you look at it and go, could this be a V bottom? You start thinking, but within your strategy, you were able just to do it. I mean, that's one of the reasons why I'm also looking to start getting into some automated trading as well. But one quick question I have for you is, why are you just not doing anything overnight? Why is everything go until 6 a.m.? What's the 6 a.m. reason?
We found that we capture about 90% of the available trend in a day if we start at 6 a.m. So it's kind of individual resources as well. We don't need to be up all night.
Doing more of what works and less of what doesn't.
Exactly.
Right, what's next, Joe?
Third trade, just to show you that they're not all winners, we do have same measurement. Now you can see that this is a much larger overnight range, and so you're not sure what's going to happen. But again, the market breaks out to the downside. We sell a pullback, and this time, unfortunately, it didn't keep going. It came back and hit our stop, and we took our loss. Discipline, same swing.
Yep.
Over and over and over again.
Consistency within the process.
Whether it's discretionary or systematic, the rules stay the same.
That's right, Joe. This was great. Thank you so much for sharing this with us.
Thank you, Anthony.
All right, everybody. Next up, we're going to talk crypto with Michael Creadon. Stay tuned.
Why trade with Tradestation? It's innovative, easy to use, and totally freaking sweet. With powerful tools to track and execute your trades and low per trade commissions on stocks, futures, and options. Upgrade your trade at tradestation.com.
Welcome back, everybody. I'm now joined by Michael Creadon. Michael, what's going on in crypto?
Anthony, good to be here. So this first chart we've got is a chart of negative interest rates globally. It's a fascinating chart. If you look back, don't have the years here, this is 2012-13, there was zero interest rates. There were no negative interest rates anywhere in the world. You look here, it's $15 trillion. The central banks are out of control. No one knows where this experiment's going to end, and that is why people are starting to look at digital assets like Bitcoin.
Yeah, because of this chart, really, right here.
Well, here's my view is, Europe and Japan in particular have given up. They've thrown in the towel. They will never have positive interest rates again in those countries. It'll never change. And that's why the Fed today lowered rates, because it's a currency war. Nobody talks about it, but that's really what's going on. The central banks have to keep lowering, otherwise the currency is going to be too strong. But this chart is not changing. You can see the trend. It's going to keep going. I'll bet you we'll have 30 trillion in negative rates in the next 2 years.
Yeah, I mean, we talk about looking at the trend a lot in this show. Higher highs.
Do you want to sell that?
Yeah, no, I don't.
It's going to keep going.
Yeah.
They did a 100-year bond in Austria for 1%. It was sold up. They bought it up like crazy. Yeah. Rates are going to stay low forever.
Yep. All right, what do you got next, Michael?
Okay, next one. Let's see here. Okay, this is the market capitalization of Bitcoins, in the last several years. As you can see, everybody knows we had that big run up in late 17, early 18, collapse back down. We're moving back up. There's still a lot of interest in Bitcoin, and I'll tell you why. You're starting to see regulators start to deal with it in a very positive manner. As you know, CME is going to be listing Bitcoin options. ICE is listing Bitcoin options. The exchanges and the regulators are embracing it to varying degrees. They love crypto overseas. I mean, I was talking to a CEO of a crypto exchange this week. He said they're going nuts for Bitcoin in Asia. And again, I think part of it's because people are worried about central bank policies and currencies. They're starting to hedge the risks, which, the world that we're from. And people want more exposure to Bitcoin.
Michael, you mentioned regulators. I'm one of these people that when I was first looking at crypto, I thought the whole goal was to keep regulators out of it. I mean, but now you're saying that because they're coming into it, it's helping Bitcoin.
It's counterintuitive because, I think when Bitcoin started, there was this whole notion of decentralization. At least in this country, that's not practical. I mean, you just can't operate outside the law. We know this as traders.
Yes.
If you're going to trade something in the United States, you're going to deal with FINRA, CFTC, the NSA, or NFA, excuse me. And that can be positive. It is positive. That's just reality. And so I think as people are realizing that regulation's not going to go away, now people are saying, this is what digital assets look like in a regulated environment.
Yeah, good points. What do you got for us next?
Okay, next one. Let's see if I'm going the right way. Okay, so this is an interesting chart. I mean, compares the exposure to Bitcoin and Ethereum. And as you can see, Bitcoin is still the dominant player. I mean, there's 5,000 coins in the world. That's crazy. But 2/3 of all the money invested in digital assets in the world is in Bitcoin. Ethereum's second. It's about, I think it's about 1/6 or 1/8 of the market cap of Bitcoin. I'm not sure exactly. But for now, we're still living in a Bitcoin-only world, almost. There are some secondary coins that are doing better, like Ethereum, Ripple, Bitcoin Cash, but we're really still living in a Bitcoin world.
Are you seeing any signs whatsoever, and it doesn't look so to me on this chart, that Ethereum or any other coins are gaining traction?
That's what's surprising to me. It's so surprising there have been so few breakouts.
Yeah.
Like I think it's Chainlink, I believe it is up about, 600% this year, moved into the top 15. But it's weird how much these coins are all correlated. I mean, here's the thing. The reality of this is Bitcoin and all these assets are like binary options. They're either going to have no value or they're going to have orders of magnitude higher volume than they currently have. That's the reality. So obviously trading them, they're extremely volatile assets. But I think they behave like options. One day nobody wants them at all. They have no value. Next day they explode. You saw the Chinese premier talked about blockchain on Thursday. Bitcoin rallied 40%. It's one of the biggest rallies Bitcoin's had in 5 years. I mean, because China is embracing blockchain technology. It's significant.
We've only got 15 seconds left. You talked about that headline. What is the major headline to rally Bitcoin that we should be looking for going forward? Is it going to be coming from overseas? Is it inside the U.S.?
I think that there's a lot of people that are basically short convexity in the market, and that's why I think the risks are to the upside. And if people get short, you know what happens when people get short. It's a short covering rally and it explodes.
Hot potato.
Yeah, exactly. So I would keep an eye on 13,700 as a chart point, and then of course the all-time highs of around 19,500 or 20,000. If either of those break, who knows where we go.
Great stuff, Michael. Thank you so much for joining me today.
Thanks for having me.
Next up, everybody, we will hear from Dan Hodgman with TopStep's Moment of the Week. Stay tuned.
Why trade futures with TradeStation? You can trade over 80 products from home, work, or on the go with a powerful, easy-to-use interface and prices that let you focus on padding your wallet, not emptying it. Upgrade your trade at TradeStation.com.
Welcome back, everybody. I'm now joined by Dan Hodgman. Dan, what's TopStep's Moment of the Week?
Awesome, Anthony. Well, last week I think we saw this exact same chart.
We did.
We talked about the exact same day. Market was breaking out. It was a Friday. We had good news coming out of the U.S.-China trade talks. FOMC was coming up, and we got to see one of our traders make a really great trade and was able to take some great profits home. That's not always the case in futures trading. We're going to have losses. It's inevitable. It's part of the game. But what matters is how do you set up, how do you react, and how are you within those trades? And that's what we're going to talk about today. So again, we're looking at the same chart. We are in a nice trend up, trading the S&P 500. We have this continuous long-term resistance level as this market continues to try to make new all-time highs. When we look a little bit closer on that 30-minute chart, again, we've got that overnight resistance. That market was playing out, and we end up having this beautiful breakout, which one of our traders that we talked about last week was able to profit on. Sometimes it's not catching the breakout, but it's finding, where does this thing turn around? Where do I find that weakness to possibly be short within that trend up market? And that's a tough question. And so that's what we're looking for here. And this trader decided to look for an opportunity and said, look, I saw momentum starting to slow up. I want to be short this market. But again, fighting that trend, I don't want to take a whole lot of heat. So we looked at that 30-20 level, which was that long-term resistance. Market got up there, started to slow up a little bit on the momentum, found an opportunity to be short at 30.23.5 with a really tight stop. And I think that's what's so important here. Kept that stop really tight up at 30.26.5 and said, look, I don't want to fight this too much, and was looking for it to return right back down to that short-term resistance here.
First of all, I love that you are showing the same setup on the daily this week that you did last week, and showing how some traders will look at the exact same day completely differently.
We all see it differently.
We all see it differently. And one thing that I've learned, and I know you've learned as well, when you're going against the trend, what I like about this trade was a $150 loss, right?
Correct.
Yeah, it looks now like you're taking a little bit of a shot, but it's 3 handles of risk, and it was only 1 contract.
It was only 1 contract.
So what I'm guessing is, and correct me if I'm wrong, trading smaller than normal.
Absolutely. Downsized, said, look, I am doing something most people would probably say I'm crazy for, but I'm only risking $150 and got my stop in place. I'm protected and I'm covered.
Yeah, absolutely, because anytime I go against the trend, one of my rules is just trade smaller, right? Unless you have multiple confirmations and everything's lining up and you're going against the trend, then maybe you try to press a little bit, but wait for the reaction first, as I always say.
Exactly.
I'm just curious, got ticked out near the high. Happens to all of us.
Gut-wrenching, right?
Why was that the stop?
Didn't want to just put too much risk into it. Went off of a gut reaction, essentially. Again, just wanted to keep that risk tight. Said, look, three handles, that's more than enough. Wasn't really technical. It was more just the feeling within the trade.
So is that consistent within this trader's theme of the way that they trade?
More often than not, it is, but ended up turning out, got another chance to be short, and was able to turn out a profitable trade.
Good stuff, Dan.
So a couple lessons in execution this week. When fighting the trend, keep your stops tight. No need to take too much risk. Those tighter stops allow for more attempts. Again, like I said, you went on to have another profitable trade and turned a profitable day. Except being wrong, it's really, really hard, especially when you get ticked out right by the high. But as long as your timing is there, timing's going to be everything in this industry. Give yourself another chance to be profitable.
I really love all of these things you talked about today. I can't stress enough, when you're fighting the trend, keep the stop tighter, because don't take yourself out of that trade opportunity, because another one might come around. You don't want to blow all your capital on the first one.
Absolutely.
And I've done that. Great stuff, Dan.
Thank you.
Next up, everybody, Dani Sittloh will join us to tell us what's on our radar using Wazzabull. Stay tuned.
This is my headquarters. This is where I trade and manage my portfolio. Since I added futures, I have access to the oil markets and gold markets. Okay. I'm plugged into equities, trade confirmed. And I have global access 24/7, meaning I can do what I need to do. Then I can focus on what I want to do. Visit your online broker today to learn more.
Welcome back, everybody. I'm now joined by Dani Sittloh. Dani, what's on your radar?
Hi, Ann. Thanks. So today I brought up crude oil. I've started to dabble in crude. It makes me a little nervous, right? But it's so great that I have Wazzabull and all the statistics behind Wazzabull to give me an extra validation for the trades. So actually I pulled up the 20-day moving average. Crude oil trades above it. It's a momentum trade. So this trade trades above the moving average. It's going to go that same direction. It's a bullish indicator. It's a 3-day outlook. 62% of this alert, it's a bullish move. 62%, awesome. 38%, it's a downside. Okay, so I'm looking at it. What happened was I was already in a trade. I was already in a long at this time. And I got the alert on my watch. And for me at this time, while I'm trading, I'm always looking to add on. And this is giving me a validation to do that. So I opened up the alert, took a look. and really had the okay to add more to my original position, which is now what I'm looking for as I continue to grow in my trading.
I love that. I think that for all the traders out there, when you're looking for more confirmation, you always want to have that confirmation backed by stats.
Yeah.
And this provides it.
For sure. And you know, Wazzabull is 10 years back tested. So any type of alert that comes up, it's consistent within the last 10 years of a profitable trade.
Yeah.
I mean, I'll take it. The more information, I'll take it. So the update report, like I said, it was a 3-day. It actually hit the upside target a day later. So had I wanted to hold that trade long term,
Give
here
you
it
the
is.
option to, yeah.
Yeah, and I didn't, but it also gave me the option to add on to my trade, of which I did.
Intraday.
Yeah, intraday.
So with a 3-day outlook, you still use it intraday.
Yeah, for sure. Yes, of course.
Yeah.
With in the back of my mind saying, okay, you could have held on to this trade, but I'm not there yet.
Yeah, no, exactly.
Not there yet. So, but in addition to this, I wanted you to take a look over to the right, and these are the stories of the products. And so Crude's story in the last month up until this date, it trades 3% higher than the previous day close, 3% lower than the previous day close, and then it crosses above the 20-day moving average, just to give the user a flavor and myself a flavor of what kind of indicators it happens within Crude, and so that I can get used to, and also in the back of my mind that perhaps this would be a product I'd want to automate.
Yeah. And we're looking at this 3% higher, and then not too long, well, exactly a month later with 3% lower. And the only reason it's the 3% is because that's one of the alerts. It's 3%. It tells you range bound, right?
Right.
I mean, more or less, because if you have a 3% higher than 3% lower, and then you could see crosses above the 20-day moving average, and even just by looking at this chart, we're basically in that same range.
Right, and what I also look at within those stories is the space between the indicators. So you said a month, so what is happening? And why would I even want to trade it during that time if it is in a range bound? Because those are the toughest days to trade.
So really it's nothing until then. So it was a month and then a little over a week and then another one came.
Yeah.
Yeah.
I mean, it's just a ton of information that's solid information.
Yeah, good awareness, Dani, there.
Yeah. And so I just want to show you the last slide is actually more statistics. One is actually the alert. So in the blue is the alert, the statistics on the alert, and what's below it is what happens in the market 3 days later, 10 years back. So they have it. It's all here.
Yeah, and like you said, eventually if you wanted to automate a strategy, whether it be this particular one with the momentum or your strategy,
Right.
this helps you identify statistics to support their reasoning behind it.
Yeah, because let's
For
be
these
real.
alerts.
There's no way I'm going to do the back testing. No
not
chance.
Not this intensive.
Yeah, no, thank you.
Great stuff this week, Dani. Great awareness and great alert for confirmation. Thank you so much. Next up, everybody, Nolan Lee will join us to discuss how stress affects pain. Stay tuned. Hey, everybody. Thanks for tuning into the show. To learn more about the charts I use, Wazzabull alerts, the basics of trading futures, and how you can even get funded to trade futures, please visit AnthonyCrudele.com. Now let me take you right back to trading futures. Welcome back, everybody. Joe and Michael are still with us, and we are now joined by the owner of Balanced Flow Wellness, Nolan Lee. Nolan, thank you for joining me.
Thanks. You're welcome, Anthony.
Talk to us about how stress affects pain.
Well, stress has a very interesting effect on pain. So I own Balanced Flow, which is a clinic that helps people with pain and injuries. And we work with that every day. And over the years, we've seen just how stress is a huge factor in how much people feel pain and how fast they recover. So the more stress people have, it seems like they feel pain more. And research actually shows that that is true.
Yeah, well, I can attest to that, and I'm sure these guys can as well. As traders, we've had a lot of pain.
Yes.
Talk to us about how you help your clients deal with stress.
So everybody responds a little differently, but the key things that we've seen help people with stress is activity, physical activity, like exercise. So getting them to do that rehab work, getting them in the clinic and moving helps a lot. Meditation is a huge thing that helps people.
That's right.
Great, awesome. in the clinic, we can also use acupuncture, and that has been a huge, had a huge influence in helping people reduce stress. And I find yoga is an awesome way to reduce stress as well.
Yeah, I do yoga and meditation. Mostly meditation is what I do. I haven't tried acupuncture yet, but it's on my radar
we can
to
get
start. So you guys know what I'm doing. Let's start with you, Joe. What are you doing?
I meditate an hour every day, and I'll go to yoga about 2 or 3 times a week.
Wow, so every day you meditate for an hour.
Coach sports. I got 2 kids and do a lot of basketball and baseball, and it keeps us busy. Yeah.
So constant movement, activity on a regular
Kids like
basis.
to run around, so you got to chase them down.
That's right.
Yeah.
So Nolan, you heard what we do.
Yeah.
Can you give us some other suggestions that we could do besides what we're already doing?
Yeah, for sure. I would say the stuff that we talked about are definitely, I would say, like the top things and make huge impacts. But often we don't remember to talk about diet, how you eat, what kind of food you put in your body definitely affects your stress level. And also sleep is a huge component. Getting enough sleep helps you feel a lot better and a lot less anxious too.
Talk a little bit about sleep and diet, those 2 things. How much sleep does a regular person need? Is it 8 hours? Do we need to sleep that much? Because I know some people that say, I'm great on 5.
Yeah. That is true. Some people are great on 5. And I don't like to say there's a magic number. You got to have 8 or your life's going to explode or whatever, Or so if you can do fine on 7, if you can do fine on 6, that's awesome. But on average, people, between 6 and 9 hours, that's kind of the sweet spot for majority of people to get enough sleep. Yeah.
Now talk to us a little bit about diet, because everybody's either on keto or whatever, right? And I feel like a lot of these are they're trendy and they come and go. I've found that just a balanced diet for me is what works best for me.
Yeah.
What are some diet suggestions you have for us?
I'm not like a nutritionist or anything like that, but I totally agree with the balanced diet. Most of your nutrients and everything need to be there. So if you're completely on one end of the spectrum here, you're probably gonna miss something. There's no way you're getting everything you need in your macronutrients and your vitamins and minerals if you're just completely omitting something, right?
Yeah.
There are those kind of empty calories and carbohydrates and stuff that's just mainly energy that doesn't have a lot of nutrient value to it. So if anything, I would say you can avoid more of those. I personally do, like just the simple sugars, the flour, basically the white stuff, right? The flour, the sugar, the wheat,
Yeah, so. I've done that myself, and once you go on that route, you really do start feeling better.
You do feel a lot better, and it reduces the inflammation in your body. Yeah, and then if inflammation is down, then your stress level should go down. Yeah.
Last question. We only have a little bit of time left. For the people that at home that are looking to start to get balanced, what do you recommend to them as their first step to do that?
In what way? In stress or
in stress, in dealing with stress. What's that first step they should take?
Take a breath. Just breathe. Just exhaling longer than your inhale clinically is shown to reduce stress level and anxiety. Okay, and then I would say second step, find some kind of modality or activity that helps you reduce stress, whether it be meditation or that acupuncture or yoga or exercise. All those are great ways to reduce stress, scientifically shown to reduce stress. So find something that works for you and then get it on your schedule and just do it.
Self-evaluation, right? I love that. Everybody take a breath and find what works for you.
Yeah.
All right. Where can people go to learn more about Balanced Flow Wellness?
Balancedflow.today is the website, and you guys can find all the information about us there. Right?
Awesome. Nolan, thank you guys so much. Michael, Joe, you guys are great. Thank you so much for joining me today. Hey, everybody, thanks for tuning in. You can catch all the episodes on anthonycrudele.com, and you can follow me on Twitter and Instagram. See you next time. All right, guys. See, I do better when